Hi, this is Kerry Artek with Wicked Stocks bringing you the daily Apple report for Tuesday, February 7th, 2023. Before I click on the charts like this one, just want to encourage you to please click like each and every time you watch the daily Apple report and subscribe to the Wicked Stocks YouTube channel. You'll be provided notification every time we upload new content, which includes the daily Apple and daily Tesla report, along with an assortment of other analysis videos that we put out throughout the month. Share the content, if you would, with friends and colleagues. We appreciate your support very much. So I'm going to start with the big picture as usual and work our way in. We had a sell signal last October. I'm not going to go that far back. That did indicate, and we were expecting the lower 120s as a target. That was hit. When was that hit? In January? Yes, in January. It is presently 121.83 to 123.07. The daily chart, actually, we hit some channel formations right to the very tick and came off of it nicely. As you can see, on the way up, we had a test of resistance. It was a range, really, 139.98 up to 144.89. We closed above the 1/3 speed line a couple of weeks ago, now 139.98. And I'd mentioned at the time that that may well be the buy signal into the second quarter, but we really needed to see how the market, waiting for the market to really settle above this channel structure, which wasn't far above that area, presently at 144.89, before expecting aggressive bullish continuation over the following 2 to 3 months into the 173.20 area. I was mentioning at the time that we were testing this long-term support, that the 170s are calling, so to speak, in terms of channel dynamics. That 170.85 channel top remains, I'm going to call it a 2023 target. And following the settlement last Thursday, above this 144.89 channel top, we're now in really 2 to 3 month mode above 144.89. So there are going to be other tests to the upside, most notably this 154.08, at least for the week itself. Now, we did push through this last Friday, but we closed right at it. It was a no-go in terms of expecting bullish continuation into this week, and it is our ceiling into later weeks. So we can top out at 154.08 into later week, and we are vulnerable, susceptible to falling back over the next 3 to 5 days to 144.89, which is a base of long-term support, able to contain selling through March, and above which this 173.20 level remains a 2 to 3 month target. I think I've been saying 3 to 5 months. And I may start just saying 2 to 3 months. Volatility certainly warrants 2 to 3 months, but 3 to 5 months, 2 to 3 months, there's not a big difference, of course. I will say that if we close above 154.08 today, it is beginning to look like 2 to 3 months where we'll reach 173.20. Now, there are other levels to talk about coming up on the market, most notably this rising channel bottom at 146.65. You can see I've got 144.89, which is once again this channel top we closed above on Thursday, eliciting a meaningful buy signal into the second quarter. I know I've got a lot of line studies here, but if I should have isolated this chart. I have in the past, just showing 144.89 and 173.20. That is the big picture in terms of the 2 to 3, 3 to 5 month target. These little levels on the way up are just hesitation points on the way up to 173.20. Hi, if you enjoy watching our daily Apple report, you'll love our daily Triple Q and SPY reports. They're presented in the same 5 to 10 minute video format. Our daily SPY and Triple Q analysis provides directional market signals that are correlated with highly specific price support and resistance levels. Whether your trading time horizon is short or longer term, we promise you a distinctive edge in your trading of the SPY and Triple Q. We offer a 5-day, no questions asked, money-back guarantee. So go to wickedstocks.com right now and start receiving your daily SPY and daily Triple Q reports today. So 154.08, if tested today, can contain buying into later week, and we can fall off from here back to 144.89 over the next 3 to 5 days. If we close today, for instance, above 154.08, then we have a 3 to 5 day buy signal into the low 160s. 160.49 is a 5/8 Fibonacci AB from the all-time high against the recent January low, and 161.43 is a descending 2/3 speed line. The descending 1/3 is 139.88. And speed line analysis suggests that when you close above the descending 1/3 speed line, 139.98, the descending 2/3 speed line, 161.43 becomes your next target. And if we close today above 154.08, we should see 161.03 within 3 to 5 days, where we could top out through next week, possibly the balance of February trade. This is a big convergence right here between Fibonacci and speed line analysis. And finally, to the upside, if we close above 161.43, we're probably just 2 to 3 weeks away from reaching 173.20, where we can top out through the second quarter, possibly in later 23. Let's take a look again at the downside. I've got 150.82. That is this high here from Thursday, and we backed off to it on Monday. 150.78 was the low. If we break 150.82, I have 148.33 as a minor point only. It is a rising 1/3 speed line over the last month. There's only so many numbers you can bunch together. And what I'm bunching together right now, if you will, is the rising channel bottom that today is at 146.65 because of its still close correlation with that channel top at 144.89. So it is the 144.89 to 146.65 area that could be in reach today if we break 150.82, the 144.89 to 146.65 area, able to absorb selling into March trade, possibly through March trade, and once again above which 173.20 remains a 3 to 5 month target. Now, if we close below 144.89, we should then continue south to 136.27 over the next 1 to 2 weeks. I'd say by the end of next week. 136.27 can absorb selling through the rest of February. We could actually turn up from here back to new highs from 136.27. And the bottom line with 136.27 is not unless we close below 136.27 do I see this market unraveling again all the way back into the lower 120s. So settling below 136.27 is your indication of the lower 120s. Now, if I were to talk about, say, options basics, I don't know if you're trading options or not, but I'm going to take a look. There's the chart I was looking for before. Holding above 144.89, 173.20 is a 3 to 5 month target. Probably will be realized within 2 to 3 months. So you could, holding above 144.89, or if we slip into the 144.89 area, scout out 171, 172 out of the money calls that don't expire for at least, I'd go 6 months out. You want to preserve your delta on the way up and be less susceptible to time decay. And, not unless, how should I put this? I think on the way down, it's pretty stair step. So if we were to close below the 146.65, 144.89 area, then you've got a 1 to 2 week target at 136.27. And you could then look for, say, 136, 138 out of the money puts that don't expire for at least several weeks. And then it's stair step again, like a slinky down a set of stairs. If we close below 136.27, you're reaching for 120 out of the money puts that don't expire for at least 3 to 5 weeks of that. But we are a long way from that scenario right now. The likely scenario still is above 144.89. We are bullish into the second quarter, expecting that 173.20 formation. And, I'll leave you with this chart here, the noisy one with all the line studies, because this is not only the big picture, it's also the near to midterm outlook. 154.08, our ceiling into later week. If we can get up and over it, expect another blast into the low 160s where we could top out through next week, possibly the balance of February. And if we close above 161.43, that 173.20 3 to 5 month target likely to be realized inside of 2 to 3 weeks. And that is all I've got for today's daily Apple report. Please click like and subscribe. I'll be back tomorrow with Wednesdays. You have a great day.